Welcome to the Opening Bid Podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this is the podcast that will make you a smarter investor and a better leader. And I want to lean into both of those things today. Normally, the millions of people that watch Opening Bid and listen to us on the podcast platforms, they know we tape this thing from the Nasdaq. So, it feels right. We're in Davos, World Economic Forum, to bring in Nasdaq Chair and CEO Adena Friedman. Good to see you.
It's great to be here, Ryan. Thank you.
Thanks for letting us in the building back in New York City.
Oh, we love having you in Marco site. But of course, now we get this incredible scenery behind us too. It's pretty good.
Yeah, we get some snow. Look, there's no shortage of things to talk about in the news cycle. We have the inauguration going on. We have a change, of course, in the White House. Take us through how you're thinking about how this change in the White House will impact IPOs, markets, and the future of technology.
Well, coming out of 2024, we were already feeling a better sense from investors that they were ready to put risk capital to work again and to underwrite more IPOs. So the IPO environment was getting better as we went through 2024. But as you know, it's been 2 years of a pretty challenging, or 3 years of a pretty challenging environment. So now with the new administration coming in, there's definitely a more, I would say, more certainty that there could be a really interesting and an exciting IPO environment for this year. We would expect, though, that it still will be kind of back half weighted as companies are getting ready. They're putting their dates on the calendar. They're actually, you just feel the energy coming through. They're doing their non-deal roadshows to understand where investors are coming from. I think that as the administration kind of sets in, it'll give people confidence to come out to the market. So we're excited about what could happen this year in that regard.
What has made it so difficult the past 3 years? We hear regulation, but what specifically has made it tough for companies to come to market?
Well, I think there are a few things. First, I would actually point to the cost of capital, meaning the interest rate environment. You know, to have rates go from 0 to 5% in such a short period of time, that just fundamentally changes an investment thesis. You know, investors have to predict the future. And then suddenly they're predicting a future that has a cost of capital that's vastly different than the future they thought there was going to be. And so that makes them pull back. That makes them say, let me take a risk-off environment, risk-off approach. Let me really look at this, re-underwrite my investments, rethink about, does this company have the fortitude to be able to operate successfully in a different cost of capital environment? The companies that are coming out now have been operating that environment now for going on this is the third year. So you know that these companies are going to be persistent. They're going to be able to answer this question successfully. And now also investors are likely to say, look, the interest rates may not go down as fast as I want, but they're not likely to go up. So they can also, again, predict the future with more certainty. So I personally think monetary policy has been a huge driver.
That's held it back.
And then I think regulation is another thing that just keeps companies from wanting to tap the public markets because they know that being a public company is a very different existence. Our hope is that in the new administration, they're going to focus on the challenges and what I'll call the tax of being a public company. We want investor protection. We want investors to feel like they have full transparency into the operating, cadence of the company and the success of the company. But we also think there's been a lot of additional regulation piled on being a public company that should be reexamined. And we're excited to engage on that.
By all indications, the new administration is going to come in hot and heavy with executive orders. And they're come out in a flurry. What could they do in the first 100 days to make it easier to become public? What's like one or two things that really would unlock things?
Yeah, I think the first thing is re-examining the proxy process. So I know that's very technical, but at the same time, it's a process that companies go through every single year. And the amount of obligation that's being placed on them, the question really is, are the proxy advisors, are they regulators? Last time I checked, they weren't, but they're also not regulated. And that's a problem too. So they don't really have the guardrails put on their operation.
ISS is that?
Yeah, ISS, Glass Lewis. And at the same time, they don't engage with companies. So if they have something inaccurate in their proxy decisions, the way that they're recommending a vote, they are basing on inaccurate facts. There's no way for a company to correct those facts in time for them to put out the recommendation. So there's some basic plumbing that could change. I think also the fact that there's actually even the PCAOB, which very technical, but the accounting obligations that are put on firms. There were going to be some very significant changes proposed in the last administration that we're hoping do not continue because they would have had to make essentially every accountant a lawyer. And that's a very, very different way of evaluating risk within a company.
Yeah,
so
my brother's an accountant. I don't think he has lawyer skills. Sorry, bro. Sorry.
It's just a different skill. So there are things like that that sound very technical, but really make a difference in a company saying, this is going to be exciting. I'm going to attract new investors. I'm going to be able to have acquisition capital, attract and retain my employees, all of the great things about being a public company. But you have to balance that against, well, what is the existence I'm going to live in? And is there a tax associated with it that's too high?
Have you
I think
talked
that
to
balance is
administration? Have you talked to any and said, how likely is it that they do this stuff?
Well, I do think that we are very familiar with at least those officials that are likely to come into the positions that have a role to play here, and we're very familiar with them. And we do think that there can be a constructive dialogue in that regard going forward.
Of course, people think Nasdaq. They think it's AI, it's tech companies, but it's biotech. Like outside of that potential second half companies of coming to market, like where's the concentration? Like what do these companies look like? What do they do?
Yeah, well, first, you mentioned healthcare. I think that's a really, really important sector for the entire economy and for society. And they've really had, I would say, starting in the second half of 24, we started seeing more of them come out and be very successful. So we definitely are feeling a lot of momentum in the healthcare space, certainly in the technology space. As well as, I would say all elements of technology, consumer tech, B2B software, obviously the chip space, the data center space. I mean, every element of the technology ecosystem, there are companies that are looking to come out this year. So it could be very exciting. And then, of course, in the crypto space, I think that there's some really, really well-established mainstay brands that are excited, hopefully, to come into the public markets as well.
How is Nasdaq going to play? Oh, let's just call it a boom. That's what we're seeing. We're seeing Bitcoin now at close to 110,000 a coin. What's Nasdaq's role?
Well, we have two roles. One, as a market operator, we list products like IBIT, which allows investors to be able to invest in Bitcoin and certainly in the direction of Bitcoin. And then we also are a technology provider to the crypto space. So we provide trading, clearing, settlement technology, surveillance technology to make sure that you're thinking about the integrity of your markets. All of that technology we actually provide to exchanges all over the world in the crypto space. So we're actually quite engaged with them. And then at the same time, from a digital assets perspective, so the broader blockchain, we have built out Puro Earth, which is a carbon removal marketplace and registry. And that registry is based on blockchain technology. So we're using the technology as well in our own market.
Can you believe how far crypto has come?
It has been quite something. And I would say in a way, it's been really interesting to see the evolution and the maturity of the space. I mean, there were some changes that were probably necessary. I think that the last
had to get out.
There's several there are several things that happened through the enforcement process that actually have really allowed the space to mature. And now in the new administration, if they actually create rules of the road, like prescriptive, proactive rules of the road that govern the markets. And actually, I think it unlock a huge amount of opportunity for more investors to participate in those markets with confidence.
Is it, we've seen recently President Trump is now have a meme coin. Like, is it how far is it going to police some of these things as they come to market?
Well, that's where having some proactive regulation is going to be really, really important. And having investor protection at the center of that regulation is going to be critical. And that's similar to the securities markets, the futures markets. We're regulated in a way that is geared towards investor protection. And it's a matter of making sure that you stay true to that mission as you're evaluating and establishing the rules. But the rules need to be there. And in fact, you ask most of the crypto ecosystem today, they want the rules because it allows them to know that they can operate over the next decade in a consistent way. And they won't have some big surprise come at them. So I think that everyone's welcoming that process, and just keeping investor protection in the center of it is going to be important.
The president mentioned in his victory rally something called the Trump effect. And I took it as growth is going to boom, everything's going to be great. Are you a believer in that?
I am a believer that the new administration is very focused on growth, and I think growth solves a lot of problems. If you can have an economy that is innovative and has consistent and persistent growth, it allows more people to participate in that economy. It creates jobs, it creates opportunity, and then it actually fuels new businesses and other things that can actually make it so that even more people have opportunities. So I'm a huge believer in the virtuous cycle of growth. I also do think the administration is being focused on taking a deep look at regulation and saying, is the regulation achieving its outcomes? And are we focused on the regulations that are actually going to drive the economy forward? Are we too backwards looking, or are we forward looking? And I think there's a huge opportunity in the financial industry to unlock an enormous amount of capital. As you know, we have a new complexity report that we've just launched today. And when you read it, you realize that complexity in the financial system has gone up 6 times in the last 50 years, but complicatedness has gone up 35 times.
Read an annual report. This stuff will put you to sleep.
Right. And so if you think about it, what you're saying is it's a much more complicated, complex world. But when you're trying to solve complexity with regulation, you create a lot of complicated processes and systems that are hard to unravel, but create a huge tax on society. Because if the banks could actually take all that capital that they're spending on regulation, which some of which is very important and some of which probably does not achieve its purpose, and they could redeploy that into the markets or into investments or into small businesses, it would drive growth. And I think that's something where there's a real opportunity there to really take down the complicatedness in a complex world.
Good. All right, hang with us, Adina. We're going to go off for a quick break. We'll be right back on Opening Bid. All right, welcome back to Opening Bid. Having a really fun conversation here at the World Economic Forum, Davos, Switzerland. It's a little cold, with Nasdaq Chair and CEO Adina Friedman. Good to see you as always. I appreciate it. You were talking about innovation and more companies come to market, and of course, this comes against the backdrop of TikTok. What will happen? What won't happen? Is that a dark cloud over companies, tech companies looking to come public? What happens to this platform?
Well, I don't know what happens to the platform, but I can say this. I think it's a pretty unique situation. In general, though, technology companies, they're gearing up for the public markets this year. And I also think that AI and new technologies that are coming out are going to just continue to lift the economy, and lift the sector and lift the markets. So we're very, very excited about the development of AI technology, how it can boost productivity and efficiency, and at the same time, how it can create, frankly, entirely new industries. I mean, if you really think about this technology and what it can unleash, it actually creates a whole new way of working, a whole new way of thinking.
I may not be here in a year. You may be just talking to a bot, a SaaS bot.
No, there's nothing like
you, Brian. I appreciate it. That's really nice. Really kind.
It's our humanity that keeps us very relevant.
So actually, this is funny. On the topic of AI, I think it was Goldman Sachs CEO David Solomon on his earnings call mentioned an AI bot can write 95% of prospectus in a couple of minutes.
Well,
it's wild.
But if you think about it, you've got all the facts. You get all the people who are there to make sure that all that data is accurate. And once you put the data in a system, it can write the text. It can write all the because it's actually a perfect use case for AI, and it makes you so much more productive. So I think there's so many There's a thousand of those use cases, even within the financial industry alone.
Of course, besides Nasdaq, spent time at Carlyle, right? I mean, you've been around financial services for decades, Dean. I mean, how impactful is AI going to be to what the business of Wall Street?
Yeah, I think it's going to be hugely impactful on defense and offense. I think the first use cases are going to be more obvious in the defense side, meaning I've got a huge obligation to report to regulators and I've got to write up all these reports. Well, as you just talked about, the AI can write those reports. So you give them the facts and the AI can write the report. So that is a massive time savings. We do that in our anti-financial crime suite with Verafin. It self-writes reports, the SARS reports, based on it actually gathering data on your behalf and making sure that it surfaces the information you need and then writes the report for you. It's great. Same with other regulatory reporting. So there's a lot of defense that can be used, where the technology can be used to take out a lot of very boring rote work. And at the same time, on the offense side, I also think that you're going to see more of it in terms of driving, let's say, investment recommendations, or making it so that you can have more accurate answers to your client questions. And in algorithmic AI, continuing to drive interesting ways to engage with investors using algorithmic AI to make predictive decisions.
Can we make these earnings calls AI-driven?
Well,
you don't want to do earnings calls anymore. Come on, you have better use of your time, right?
This is the way I look at it. I actually embrace the earnings call. Really? I do, because it's like a report card. I mean, I was definitely grades oriented when I was a kid. So every quarter you have a report card, and you have to work hard at it. You've got a test, an exam at the end of every quarter, right? And that gives you a sense of where you are and where you are in your journey and how your milestones are working and all those great things. And so to me, it's actually a great way to engage with your owners, because your shareholders are your owners, to make sure that they feel like they understand where you stand in terms of your report card.
Do you think reporting, I'm going down a rabbit hole. I personally think earnings calls should be reinvented, but do you think earnings should be reported twice a year in the US?
Well, I know that in the UK, they have like two of their earnings that are more comprehensive, and then two what I would call updates in the other 2 quarters. As much as I actually like that, because I think it drives a little bit more of a long-term orientation towards strategy implementation, I think it's very difficult to see a world where the U.S. does not embrace the quarterly process. The one thing I would say, though, and I'm a big believer in this, I'm not a believer in quarterly guidance. I think quarterly guidance
Where did this
creates
even
a
come
very
from?
well. It really drives short-term orientation from the investment community, and from as a result of that, from the corporate community. So I think it was actually done in order to make sure that people didn't get overly enthusiastic. But I actually think that in general, we provide medium to long-term outlook on our revenue growth and then our annual cost guidance. And I like that balance in terms of being focused on longer-term future as to where our growth drivers are and how we can achieve that, but then being very specific in how we're managing our business.
Why any guidance at all? Why do the markets need guidance?
Well, if you think about it from the investor's perspective, I'll take their side for a minute. First of all, many of the analysts and investors they're following like 100 companies. They're following a lot of companies. And they have to do an enormous amount of work to model out the future of these businesses that they have no experience in. So in a way, the guidance can help frame out what their expectations are over a multi-year period of time as they're trying to decide, is it going to be this one or that one? Because they're always comparing you to something else. And that's the other thing, is that it allows you to have more comparative data. But personally, I'm not a huge guidance fan.
All right,
so
I'll stand down on some of my views. You're
I can
convincing me a little bit.
I can actually say that in a world without guidance, I think in general, I could get behind.
We're tripping behind that. All right, so I want to leave enough chunk of this podcast to DEI. Some of this stuff is admittedly over my head. I'm not a DEI expert. I remember when you launched your focus on DEI. What was it? One person of color on the board, one woman on the board. From an outsider looking in, these seem like good initiatives. We've seen a complete rollback. Walmart, Meta, of course, with Mark Zuckerberg. What do you think about what's happening with DEI right now?
Well, so first of all, the rule, just to make sure, the rule that we had was a rule that we implemented that really was meant to kind of simplify disclosures on the board composition from a diversity perspective, and then to provide an encouragement, I would say, not a mandate, but encouragement to have at least one woman and one underrepresented minority on the board, or explain to your shareholders why not. That was the rule. And so it was very straightforward, but the whole idea of it was actually to simplify. And as I said, you want to be able to have data that's comparative. And this allowed them to have a very simple table that investors could evaluate across thousands of companies. And it was pretty straightforward. The courts have decided that that's not consistent with the law of the land, and that's fine, that we accept that decision. But we are very proud of the fact that companies were easily able to provide that information, that disclosure, and I think it elevated the conversation of what is the modern board, what does a modern board composition look like in today's world, and how you want to think about all aspects of diversity of experience and expertise and background. So I do think it's done a good job of elevating the conversation. As we go forward, I can't speak for all of corporate America, but I can say for Nasdaq, we've been very consistent and persistent in making sure that we're focused on creating an inclusive environment, a culture that naturally attracts great talent.
You're not rolling back your initiative.
We feel great about the initiatives that we have. And I wouldn't even call them initiatives. They're actually, frankly, quite integrated into the culture of Nasdaq. We've been very mindful and thoughtful about how to implement them so that they are culture-driven. And then we work very hard to make sure we go out and attract more talent from different diverse backgrounds as a way to bring great people into the organization. It makes us a better company. It does. It makes it so that we have richer conversations. We are representing our clients in a more holistic way with our own people. And I also believe that it is actually a better way to do business, and it gives us better outcomes. So we're very comfortable with that.
Corporate America being taken back decades with some of these DEI rollbacks.
I personally think that I personally do not think so. I think in general, I can say for Nasdaq, we're very proud of what we do. We're very comfortable and confident in what we do. We feel very good about the results that we've been able to achieve in terms of creating that culture of inclusivity and belonging. And I think a lot of companies feel the same way I do. And it's just going to be a little bit quieter in how they implement.
Isn't more diversity in the boardroom better?
In general, I think governance, you need to look at, as I mentioned, diversity in a lot of different contexts. So definitely experience and expertise, geography, and background. I think all of those things matter because you want your board to represent your team and your clients. And as I think about the world today, it's a diverse world. So as we think about how do you bring in people who can represent your employees, who can represent your clients, and have a richer conversation, I think it was a component of it.
I do have some leeway on this podcast, and I've always viewed you as a badass in a good way. What do you fear? What do you think when you hear some executives say we need more macho energy in the executive suite? Is that what corporate America needs right now?
I can say this. It is a competitive world, and I think being a CEO is a competitive existence. I am a competitor.
You're fierce competitive.
I am a very competitive person, but being competitive and being quietly confident they're not antithetical to each other. Having quiet confidence, being humble, being a learner, being willing to listen to other people, that's a core part of being a successful CEO as well. So being competitive, being, I would say, quietly confident, we call it quiet confidence at Nasdaq, and making sure that you're always engaging with building trust and engaging with your clients and your team. That's what really that's what I think creates greatness in a modern CEO. And I think that, frankly, it's going to be like that forever. I don't know. I've not heard those comments, so I can't really speak to the specific comments.
What's your advice to the next generation of CEOs who are hearing the DI rollbacks, hearing comments from various leaders that you need some more of this high energy octane in the executive room? How do they tune this stuff out and be their best authentic selves?
Well, I think, first of all, it's a matter of how the board thinks about what's needed to make the company successful. And they should be seeking a CEO that can lead a modern organization and can drive what's needed for that company at that time. I think for Nasdaq, we operate in a hyper-competitive world. We compete for every order. We compete for every listing. We compete for every software sale. And at the same time, we have to build trust everywhere. Our entire business is founded on a basis of trust. And trust means it's much more holistic in terms of the relationship, the partnership approach, the equal way that we want to engage our clients. That's different than, I can be a rah-rah person and still do all of that. But I also think that in general, that's the modern world that we exist in. And I think that's the best way to lead.
In the last 2 minutes of the podcast, we always love to ask folks for their hot takes. So let me go with this. I'm living the moment. I have none of this written down.
Okay, I know. This is really fun. Okay, I'm ready.
How intense is the battle with the New York Stock Exchange? You don't have to mention the name. You don't have to mention the name. But do you wake up thinking I got to get them? I got to get that order. I got to get that IPO.
It is a very intense competition.
So it's like Coke, Pepsi.
And now I can say this. I genuinely like the leadership of ICE and and the New York Stock Exchange. It's rolls up to ICE. I like them very much, but I will compete every single second of every single day to win every single listing. And our team is very focused on not only winning, but keeping. So one of the things, and attracting companies. So I have to do this. So this year and last year, we were able to attract our 500th switch from the New York Stock Exchange to Nasdaq.
500?
Yeah. So we have had 500 companies come to Nasdaq since we started being able to switch companies, which is about 15 years ago. And we also
How do you do that?
And we're just thrilled with that. In addition to, of course, we win about 75 to 80% of all the IPOs today.
Will you still let opening bid back in the building after all these questions that I randomly asked you?
Definitely. In fact, this was just great. I don't know. I think that we're going to have to do this more often.
Yeah, you know where we take.
I do.
All right. Well, Nasdaq Chair and CEO Adena Friedman, always a treat to spend some time with you. Thanks for joining the podcast. We appreciate it.
Thank you.
All right. Be sure to hit us with those thumbs up on Spotify and Apple Music, and thumbs up on YouTube. We appreciate the love. Thank you for always watching us, and we love all the feedback. I personally answer so many of your questions because, well, that's just what I do. That's it for the latest episode of Opening Bid.